Hello, everybody. Welcome to Weekly Market News. Today is Monday, 3rd of May, and we are beginning the new month on the markets, which you can see on futures here on stocks indices around the world is looking a bit more positive as Friday's session was more of a correction where we were taking some losses on big technological stocks. Speaking of big technological stocks like Apple, Facebook, Amazon, although Fang and the Big Five reported their earnings for first quarter last week. And speaking of all of those names, talking Facebook, Apple, even Amazon reported extremely positive earnings. Even Microsoft and Netflix. Netflix was a bit of a disappointment as the uh, new consumer growth and new subscribers growth didn't grow as it would be expected or as it would be appreciated even more. But other than that, the other technological stocks like Apple, Facebook, or Amazon reported extraordinary blowout quarter with very strong results and even a double-digit rise in revenue over year over year. Speaking of Apple, it was something about 40%, Amazon again something about 50%, Facebook 44%. Even Amazon was able to reach and rise, grow above 100 billion in revenue for one quarter. So they even broke the record from previous quarter. Apple wasn't that positive. They recorded about revenue and about, I believe it was something about $89 billion. Every measure over there, talking about revenue or EPS or net income, was above expectation of the analysts, and those expectations were already very positive. So overall, speaking of these, if this big technological, those big technological stocks, they were driving the bull rally in 2020. Everything is looking still quite sharp. Those are still the companies that are making one of those biggest profits on the stock market. And even with the economy reopening and the consumption back in the economy, we can expect those companies to outperform other companies that are maybe more value or cyclical, and those growth stocks will probably still outperform those cyclical ones. If you look at the performance of stock indices, they were not so positive. It's more of a sell the rumors, buy the news. Buy the rumors, sell the news. You can see S&P 500 hovering near the record highs. Nasdaq, as the technological index, was even close, even a little bit lower last week with those very good very good results. On Dow Jones will also more or less consolidating for the last couple of weeks. So let's see what the new month is going to bring. But like I said, positive sentiment was approved by the results of the big technological names, which still will lead the path for stock markets in 2021. Um, Other than that, obviously, we are expecting another earnings this week, with Friday session being one of the most interesting ones, as we are expecting job data from United States. Like I said before, we are expecting some earnings releases from companies like Berkshire, Pfizer, Skills, T-Mobile, PayPal, General Motors, Uber, a lot of companies, like I said, Hilton. We will probably have a bigger picture from different sectors of the economy, cyclical growth, even those value stocks that we expect to perform some even reported some earnings as they performed quite well since the beginning of the year, and they have to obviously show investors and which who put their trust in those companies that they are able to make some money in the first quarter as the economy was partially closed around the world, and we are reopening right now. As we look at the Forex, last week was a bit more choppy as we on Euro USD closed the rally and the bull run that we had here, and the Friday session was one of the worst. Speaking of the Friday session, obviously we were seeing some correction on stock indices from those record highs, and obviously we were more or less working with the fact that the yields from U.S. Treasuries are higher again. They are around 165, which is more or less bearable um, for risk assets and most probably for stock indices. But the higher the yield, the more attractiveness is going to bring and the more demand for US dollar. So the US dollar was surging around the currency pairs. We have quite a space for correction of those losses early this week. So especially on Euro USD, but also on GBP USD, which was under heavy pressure on Friday, and this session, like Monday, Tuesday, Wednesday, can lead to erasing those losses, and maybe which will be maybe even more interesting if we will stay in this descending channel, and perhaps we will not see this break above 140 in the near term, in perhaps this month. Also, other currency pairs more or less affected by the performance of US dollar, Australian dollar. Again, we are in some trending channel here, so, with the support and resistance area here in the chart. Friday session was more or less negative. USD CAD, Canadian dollar, is surging quite a lot. It's even surging with the economy and the hard economic macro data looking very positive with the outlook from the central bank that the economy, if the economy will accelerate with the inflation and the job data looking good, central bank will ease their policy even more. Other than that, oil was looking quite positive, although the Friday session was going a little bit lower, but we are here trending in this uptrending channel. You can see it's you can see the channel here that we are staying in. So we are fairly very slowly going up to check the higher prices, but overall the sentiment and the fundament for the market hasn't changed much, as the OPEC is still planning to ramp up the production steadily through July, and we probably should see from the economies in Europe some demand, some increased demand in the summer months, in the upcoming summer months, as the economies are reopening again and the lockdowns are getting less and less strict. So that's about the markets last week. Like I said, we are expecting earning seasons and some interesting names to report this week. From macroeconomic standpoint, we have on Tuesday interest rate decision from RBA, so Australian Central Bank, on from US. Not much on Tuesday. On Wednesday, though, we have employment data from New Zealand. We have ADP, non-farm employment change, ISM, non-manufacturing PMI from United States, as well as stocks exchange. And on Thursday, We have a bunch of market PMIs from US. Bank of England is having its interest rate decision with the Bailey, the governor's speech on the afternoon, and on Friday, like I said before, the most anticipated data, job data from the U.S. and employment data from Canada. Those data from U.S. especially should look very good. We'll see what the expectation will be like, but if the expectation will not be as big, we saw the unemployment claims in the previous weeks, the decline rapidly. So this should mark in where is the unemployment rate is here 6%. If we will go below 6%, it will be very positive, and we can probably see some reaction on stock markets and even a US dollar, which we'll see how will perform this week, but it's looking to strengthen a little bit as the last month of April was a bit negative for the currency, and it closed like about 2% lower. So this will be it for today's video, guys. If you have any comments or questions, leave it down in the comments below the video, and I will see you next week.